after price came to mitigate this candle level here, when you check that in the 4-hour time frame, when price mitigated that, we had movement to the upside in the 4-hour time frame that gave what? A market structural shift here. And then price continued further to the upside and broke out of this high points, because here we have this range bound market movement, and then price broke out of it because successfully you can see volume traded above it. This first movement swept the high, but then we had pullback, and then price continued to the upside and then took out the high points here. So we have a valid break of this range bound movement. So now we have that bullish movement. So what you can see is that now price created a high. So if price is dropping to the downside, you get it. You need to now ask yourself, where is the liquidity that price is going to seek to the downside? Because when price takes out an external liquidity, price would want to return to seek an internal liquidity. You get it. And basically, this is the swing low point created here. This is a swing low point created. So we would want to see price sweep this low point here. So you now ask yourself, below that low point, in Confluence to a higher time frame, where is an unmitigated block? That is where you have that daily level. What you now need to do is, okay, from this 4-hour time frame, at that daily block level, what can you see? What you can see in the 4-hour is that, okay, you have a fair value gap here. And then also inside it again is another fair value gap. And this fair value gap here is in Confluence to this breakout block, because here you had a buy movement before a sell movement that took out a liquidity here. You get it? So what you will now need to do is to now wait for the mitigation. But then with this already established for me, I can decide to set a buy reason here from this one, the level of this daily here. And then I'll put the entry there. And then I can put my stop loss below this breaker here. This other one, because it is also a valid zone. You get it, sir? It is also a valid zone because price may dip a little bit lower to it to tap it. You get? So with this now, I can decide to set an entry here. First, then I'll be targeting to see price takes out this high. That'll be the first target. And what you can see, this is already 1 to 5.48 RR. And then the next will be to trade it then to the rejection level, to this rejection level here, because we have this colored, bearish colored candle here, swept this buy side, and then we had bearish movement to the downside. Price did not mitigate it. Price did not tap it, the level here, before continuing. And that is why you can see when price traded to the upside, it reacted from it a little and sold before the bullish continuation. So my first target in this case would be to target this high. The next is looking forward to see how price will come to this before targeting this, before targeting the next buy side liquidity. And why for me, I would want to take this entry here is this. I've identified that a sell side liquidity have been taken. Price again returned to the downside. This movement here also seeked the sell side, respected the rejection block, and what can we see? Strong bullish impulse that took out this high, creating a market structure shift. So this is the daily level. This place is the daily level, which is this daily bullish order block. Let's look at the daily time frame, which is this daily bullish order block here. Price did not mitigate that. In Confluence, you have a fair value gap. So price can react from there and we have the bullish continuation. So in the 4-hour time frame, what can we see? I can just set an entry here. No need for me to want to wait for a lower time frame confirmation. Why? Because I have a confirmation from this structural delivery that price here took out sell side, bullish reason, return again. This return took out this sell side, respected the rejection block, bullish impulse, market structure shift. Aside from the market structure shift, price further went to the upside, broke out of this consolidated price movement. So I'll be waiting to see what is the valid reason we have a sell side, a drawn liquidity to the downside that price would want to seek. Below the drawn liquidity to the downside, we have the daily level. In the 4-hour, what can you find in Confluence to the daily level? You have a fair value gap here that is in line with the line I marked, which is the open price of the bearish candle. And then slightly below it, you have this fair value gap. And this fair value gap is in Confluence to a breaker. Let's mark the breaker this, because you have a buy movement before a sell movement that took out the sell side liquidity. So it means if I'm taking my entry from this high level, I would want to make sure that my stop loss is below the next zone, because this candle wick may decide to dip more lower into this before continuing to the upside. We're not even talking about session here. We're just looking at it from the perspective of the structure. In case you didn't take your entry here, you're now waiting for a reason to want to take the entry. Let's say you're just dwelling on the 4-hour time frame. But let's look at that from now, the 1 hour. What you can now see from the 1 hour is this. You can see from the 1 hour, we also have a sweep here. Price went bullish, giving us change in state of delivery, because the volume here did not close above this week high. But we have volume traded above the volume of this high points. So we have a change in state of delivery here. And what you can see is, let's just mark the internal structure here. You have this movement, price pullback. We had this before price continued bullish, created a pullback, and then created this. Let's make this tick so that we clearly see it. So you can see we had this pullback, price fell. What can you see? Price swept sell side, creating a strong low. Has created a strong low here. Went bullish, returned to the downside, give us this reason. We have a change in state of delivery here. Now price came back to the downside. If price is returning to the downside, you are not to carry this as your level to trade. You are not to identify this level as a possible point of interest. No, you get it is not high probability, because institutions would definitely want to seek a liquidity before they continue bullish. And what you can clearly see is this is the main candle that swept this sell side liquidity. So it holds the probability that price will respect it rather than this zone. So this has the high probability to fail. Price would want to come to this candle that took out the liquidity. If we had the movement of price to the upside here, and then price possibly now creates a new pullback and then went like this, then that is when you can consider that this zone may possibly hold to give us bullish continuation. But the fact that this is a pullback before this bullish reason, then this is a sell side target. It is a sell side target. That is just it. And when you're now looking at it, let's look at it. Go to the 4 hour now. Once somebody knows how to interact with the time frames, you get things right. 4 hour gives you a clear picture that this is a candle that swept this sell side liquidity. So it would want to take out this low. It would want to take out this low point before we have the bullish continuation. So when you go to the 1 hour time frame, so we have that established that we don't want to trade from this bullish zone because it has the possibility to fail. So we have our change in state of delivery established, and then we've identified the inducement, the sell side liquidity. And this is the rejection block, because this is the candle that swept the sell side, and the candle wick was not mitigated. What you can see is price just continued bullish. When this swept liquidity, it just continued bullish. We have this wick not mitigated. We have the wick unmitigated. So you can see how price returned just to mitigate the wick and then continue bullish to the upside. So when price continued bullish, we have now price gave us a pullback, bullish reason to the upside. Price broke this high point and strongly continued bullish again, breaking this other high, which is also in Confluence, all the highs of this consolidated movement. So when you look at this, price pulling back to the downside from the 4 hour time frame, the strong valid next draw on liquidity is this low point resting here. And when you now look at it from the daily, it is that you have what's the low of Monday, the low of Tuesday, and now price has created the low of Wednesday before price would dip to the block you have here. It means that when you have a sell entry, when you possibly have a sell model from this daily rejection block, we'll check that now. From this daily rejection block, when you have a sell model, a clean sell model from the 1 hour time frame, it means that where you'll be targeting to sell to, it is the fair value gap resting here. So you can target the mean threshold of a fair value gap before you start targeting to see price dipped to the bullish order block, the open price of this down close candle. So what you can see, we had the rejection level here. When we go to the 4 hour time frame, if you want to take a sell movement, what you would see is when price came into that daily rejection block, clearly what you can see from the 4 hour is this. Price swept to this high point. Yes, because volume failed to close above the height of this bullish colored candle. So price just swept to the high point. Volume closed below it. Let me make the line tick, sorry, so that we clearly see it. So volume failed to close above it. So volume traded below. And then the next thing you can see is that this also went, swept this liquidity, and volume now traded to the downside, closing below this. So we want to assume that now this is the delivery you saw when you were on chart, when price came to the rejection block. Let's look at this way. Let's do it with this candle. So this is what you have. Let's say when you came to the markets, this is what you saw in the 4-hour time frame now, which is price reacting from the daily rejection block. You know you're bullish, but then you're looking at the bearish, the counter trade opportunity to trade to your bullish zone before you take the trade. So you see this now in the bearish zone. When you check the 1-hour time frame, what you can now see in the 1-hour time frame is this. You can see in the 1 hour, price took out this high points. They had a fall to the downside. Price broke below this low. And what can you see? This is London. London took out the Asia session high, displacement to the downside, breaking below this low. So this has given you a sell model to want to sell bearish to where first targeting this sell side liquidity. Next is to see how price dips to the daily bullish order blocks. So you can now see it when you check the 15-minute time frame. So in the 15-minute time frame, what you're going to see is, yes, you have seen your Asia session establish. So we have, this is the Asia session high. This is the Asia session high. Price took out this, and you know this is a liquidity run. Why is it a liquidity run? Because volume traded above this high. It is not just a sweep. It's a, we have the liquidity run, we have the liquidity sweep. Liquidity sweep is basically when the candle wick is what takes out liquidity. Liquidity run is when you have volume takes out a high or a low, and then you have price moves in the opposing direction and takes out a previous structural point. So here the London session took out the Asia session high, volume traded above that anyway. Price came to the downside. We have a market structure shift. This is a strong low. What makes it a strong low is the fact that this also took out liquidity. You can see liquidity, stack of liquidity was here. And then price came, took out those liquidity and went bullish to the upside. But now you can see price came to the downside, violated it, volume closed below it. So we have what? A market structure shift here. So since what we have is a liquidity run here, you want to identify if price is pulling back to the upside, what is the next liquidity that the institutions will seek? It is this. What is resting here? So you ask yourself then, from the 15-minute time frame here, what is above this? This is what you have above it. You have a fair value gap. Next again, you have another fair value gap here. Next, what do you have? You have the bearish order block itself. So you see, you have 3 points of interest, this one, and then this one. So in such case, you want to be sure which one should you consider. Now, this is the 15-minute time frame. It is either you go to the 1 hour or you go to the 30 minutes. Let's say, for example, now in the 30 minute, what you're going to see is the fair value gap here in the 15-minute time frame. It is inside this 30 minutes bearish order block. But then the next fair value gap in the 15-minute time frame, you can see it is also in confluence to a fair value gap here in the 30-minute time frame. So in the 1 hour time frame, what you're going to see again is this: the fact that the fair value gap in the 15-minute time frame and then the fair value gap also in the 30-minute time frame is in confluence with a fair value gap here in the 1 hour time frame. I say that. So basically now this is the 1 hour bearish order block. So when you go to the 15-minute time frame back, this was what I saw. We had price gave us a sell movement before this bullish movement. So I just marked this again, meaning we have a breaker here because this is a sell movement before a bullish movement that took out this high. So I had my entry in respect to the fair value gap zone here, which is in confluence to the one in the 5 minutes, in confluence to the one in the 30 minutes, in confluence to the one also in the 1 hour. So what we can see now is the short was just at the tip of this fair value gap because we have a breaker which price may push for that to tap the volume. I necessarily didn't have to put my stop loss above this. I just wanted to have my stop loss just above the next fair value gap. You get it, sir? Because why? There is a breaker here. Price may not violate. Your next target, basically now, it is this next draw on liquidity. Before you have the next draw on liquidity, the next draw on liquidity, which is now going back to the 4-hour time frame. If you are targeting now extremely to just take out the 4-hour, so it means you're expecting your entry, and then you want to take the movements to take out the sell side. And now this is 1 to 17.62 trade setup. So let's go back to the 15-minute time frame. I think I have this chart setup saved, but anyway, for me, it was this sell side I targeted first, not necessarily the extreme. And what you can see is that this is a valid level to aim for price to take out liquidity, because you can see this Asia session here did not take out any liquidity before it had a breakout and went. So the Asia low was not swept. With this established, you had your level marked, and then the stop loss was there. You play price to see. So you can see. That is how most times you feel like I used to get sniper entries. You get, it is just how I look at the price. Yeah. So my expectation is the fact that, okay, we marked this fair value gap here in the 15-minute time frame. After we've identified that the Asia session has been taken, and now we have a market structure shift, we're looking for an inducement liquidity because what we have is a liquidity run. So we looked at it that this fair value gap has strong probabilities. Why? It is in the 15 minutes, it is in the 30 minutes, it is in the 1 hour. Price may not necessarily trade into this one and into this one. So you see, that is why when people over-refine their point of interest to a lower time frame, some people get to end up missing trades. Because another person here would want to take the short position from the bearish order block, possibly here, and then the stop loss above the bearish order block. But then you can see price did not return to that. Price just came to this fair value gap that is in confluence with the one in the 30 minutes, with the one in the 1 hour. And then what I now identify next for me to know where I want to place my stop loss is the fact that in the 15 minutes, we have the sell candle before the bullish movement that took out this high. So I'm not expecting to see price violate this. So the stop loss was above it in confluence with this fair value gap. And then the next is to see how price would take out London low. The next is all of this liquidity resting here, because also it's a trend line liquidity, to see how price would take that out. So you can clearly see by looking at it patiently, you have a clear sell model that was established here. When price reacted from the bearish rejection block we marked from the daily time frame. So you can see the entry we had, and you can look forward to see how price continues to take out those sell side liquidity. So we're having that movement. You can see what New York did. When New York session began, this is New York. Price traded to the downside, taking out the London low points. And clearly you can see what the price came to here, which is this particular block here. Price reacted at the other block. Price did not necessarily react from the week. So price reacted from the volume here, because also you have the fact that nothing really mitigated that before continuing. Price took out the sell side, came to this block, gave bullish reaction during New York. So bullish reaction back to where? A fair value gap resting here. A liquidity zone here again. Mitigated that, continued bearish. So what you're going to see is, I believe when we go to the 1 hour, what we're going to see is a bearish order block. Let's check that. Yes, so you can see we have a bearish order block here. So you can see from zone to zone, zone to zone. What do I mean by zone to zone? This is it. Price traded to the downside, price seek this sell side liquidity. That should be your first target, to see how price seek this sell side liquidity. Why? Because price can react to any block below it and give a bullish reaction. And you can clearly see is the fact that now price reacted from this unmitigated weak. Because what you're going to see is you have a fair value gap here, a fair value gap still left here, below this sell side liquidity, an unmitigated weak here. And this is also a valid zone. Why? It swept the low of the previous candle and then gave us bullish reason that took out this internal structural high point. So when price came to that, reacted. Let's check 4 hour, what we may possibly see here. Let's check the 4 hour time frame. See, in the 4 hour time frame, you don't necessarily see anything here, but what you can see is that yes, this is an unmitigated weak. And you can see what price aimed for here, relatively equal low points here. This is a low point. This candle and this candle created a low point here. Created a low point. So that is liquidity resting here. Price came to an unmitigated candle wick, gave what? A bullish reaction. So you have to know how to connect this time frame. Here in the 4-hour time frame, you know is that you have this wick. It is unmitigated. When you check the 1